to make money in stocks, there's got to be a secret, right? Well, there is a secret. There's just one thing that you need to be focused on. No, it's not the headlines. It's not interest rates. It's not money supply. It's not what's going on in China or some other country. That is not the secret to investing. The secret to investing is follow the money. Okay. You need to follow the earnings, because a company that makes a lot of money, stock price goes up. Investors are happy because they make money. A company that is making less and less money over time, their stock price is going to go down to the basement. We're going to do a couple of examples, but honestly, save yourself a lot of time, focus on the earnings, and you will become a better investor. Hey, I'm Luke Downey. Here's another edition of Lessons with Luke. I've been investing for about 2 decades, learned a thing or two. I just want to make people better investors. And so that's what this is all about. So if you like this content, make sure to like and subscribe to our YouTube channel. So let's get into it and talk about what really drives stock prices over the long term. Is it technicals? Is it fundamentals? Is it interest rates? Is it what's going on in Turkey? Is it lumber prices? No, it's earnings, okay? It is so simple that if you follow companies that make a lot of money, you are going to most likely make a big return, okay? That is as simple as it needs to be. You don't need to worry about the story. You don't need to be worrying about why this stock is down, why the market is down, and what the sector is doing. Just focus on a company that makes a lot of money, and they consistently make more and more money year after year, and then your portfolio is going to be in good shape. So we're going to go through a couple of examples, but before that, I think it's very important to prove to you, or at least try and show to you, that following headlines typically is a bad idea over the long run. So I'm going to be a homer right now. I'm going to share my screen, and I'm going to hop on over to CurzioResearch.com, which I write a piece. It's free every single week, comes out on Mondays. And we're going to go over one that I wrote on April 26th. What to buy if you're worried about rising taxes. This was super cool because everybody was worried about taxes and blah, 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 blah. But here is the major deal. And you could read this. It's a cool article. That's not what we're talking about. What's more important is at my research firm, we went and we looked back at some of the biggest crises, some of the biggest worries, some of the biggest headlines to hit Wall Street over the past few years. Okay. And then we wanted to know, what did it actually do to the stock market, right? So here we are. Anybody remember the Greek debt crisis? I do. You remember China growth fears, Black Monday, the US debt got downgraded. These are huge, huge headlines, taper tantrum. I remember there was Ebola. Remember when we were worried about Ebola, Crimea, all this stuff, COVID, China stocks getting delisting, you name it. All of those scary headlines we have here laid over the S&P 500. And what did you notice? Yeah, they may have had a little bit of an impact over the short run. I mean, it may have been, you stub your toe a little bit, but quite honestly, if anybody can take anything away from this chart, is that stocks go up over time. The S&P 500 looked at that crisis and said, I don't give a damn. Okay. So again, save yourself some time. Stop worrying about headlines. Stop worrying about, the story du jour, because it isn't going to help you. And in fact, it is probably going to make you lose a lot of money because you're going to get scared. You're going to bounce out of your great stocks. That's not what we're trying to do. So that is the main thing. Hopefully you can see this. You can say, you know what, there is something here. So, what should we be worried about? Again, we already know, because I'm going to tell you, we are going to be looking at the quality of earnings. And so to do that, let's look at a great example. What is a great company that we all know? It is Apple, right? Why? Because they make great products. I think everybody knows, even over the past 10, 15 years, we can all say that Apple had some great products, right? And what's really cool about it, going back to 2002, I'm on Yahoo Finance. You can look at a chart. This is split adjusted, right? Stock price was like $2, $1. Now it's up to 125 bucks. So here is what I'm trying to show you. Over the long run, great companies like this, what caused their stock to go up this much? Is it a whim? Is it diamond hands? What is it about Apple that made their stock just go to the moon? So I'm going to show you. right here. This is another website that you guys could check out. It's called macrotrends.net. And you can look at earnings. You can look at the net income. That's what we're going to be looking at for Apple over the same time period. Okay. So here we are, 2006 all the way to 2021. This is the trailing 12 months of income here. And all you need to see is that the numbers just exploded higher. The company just kept making more and more money. What do you see here? Quarterly earnings, they just keep getting bigger and bigger. You can look at the growth rates. Yeah, they stumbled a little bit, but all you need to look at here is just how much money the stock was making. So listen, it's all about earnings, right? And it's not surprising that Apple was great because we all tested and tried out, or at least saw somebody with an iPhone many years ago. We also saw iPods. We also see iTunes and everything else that Apple does, their iPads. They make great products. You can't be surprised by that. Okay, the company was great many years ago. That is the recipe for finding great stocks. So now what I want to do is I want to look at an example of a stock that hasn't done so well over the same time period. So what are we going to do? I'm going to share our screen real quick. And what is another company that we could look at them at Yahoo Finance? This is IBM. Okay, IBM, Big Blue, used to be an amazing company. This company used to be similar to like Apple decades ago. I mean, they had the best technology. They made lots of money, but then things started to slow down. And, you know, since 2002, what do you see the stock do? It really didn't do much. I mean, it went up, it went down. So what can we look at? What can we see in terms of their income? So going back to macro trends over here, .net, let's look at the income. Well, the stock basically followed how the earnings went, right? Earnings were going up, up, up. Then they started to trail off. And that's what's happening with the stock price. So it is no secret of what moves stock prices. Okay. And these are two examples. And that is all you need to be worried about. Okay. What companies have great products? They make a lot of money year after year. Find those you want to be invested in, right? Just make sure that it fits with your investing personality. And then companies that are in a long-term downtrend where they're having earnings that are decelerating, typically the share price is going to follow that trend. It's going to go lower. So listen, I hope you guys have taken away something very important here. And I'm going to say it again because I want to keep it so simple. I wish somebody would have told me this when I started investing. Follow the money, follow the earnings. Don't worry about headlines. Don't worry about news because it's going to make you scared. You're going to worry. You're going to get out of your good stocks. Apple, even though we saw that rise to the moon, there were so many times the stock sold off on poor earnings or a downgrade or some type of supply chain disruption, whatever. All you have to do is follow the earnings, and then your portfolio will be in good shape over the long run. So hopefully you guys got something from this. Leave me a comment. I'd love to hear some of the great companies that you guys are finding that make a lot of money. I'll see you next week.